I just bought AMD shares in the after hours, and on today's video, we'll talk about many of the reasons why. What is going on, investors? Hopefully, guys are doing well out there. Advanced Micro Devices, otherwise known as AMD, reported their earnings after the bell, and we'll talk about why I had to jump in and start a position in AMD in the after hours. Some of it has to do with the technical pattern. Some of it has to do with the chart, but a lot of it has to do with the Q2 numbers, which came out after the bell. Also, more importantly than that, we got third quarter upcoming guidance for AMD as well. You're going to absolutely love those numbers. We'll compare those to what Wall Street expectations were. Take a look forward into Q3, Q4, Q1 of next year, and then we'll dive into the numbers as well. How's the revenue? How's the profit? Also, we'll be keeping an eye on Intel as well, seeing how their stock is performing in the after hours, as AMD almost a direct proxy for Intel, at least on portions of their business. Now, AMD reported their earnings after the bell, and look, it's been going well for Advanced Micro Devices, although year to date, I'm seeing shares down about 5%. Over the past 6 months, taken a huge hit, down 21%, as we've seen a little bit of rotation out of these high-flying semiconductor stocks. But with AMD, you've pulled into an area that is absolutely a great buying opportunity. And the reason for that is the Q2 revenue came in at $5.84 billion. The expectations were for $5.72 billion. The high-end estimate on Wall Street was $5.9. The low end was $5.7. So coming healthily over kind of the midpoint of that. More important to that. And look, we'll dive into that. $5.8 billion. We'll talk about the gross profits. We'll also talk about the data center mix and how they're getting more and more revenue there, as NVIDIA has obviously captured a huge amount of market share as it relates to high-end data center. AMD certainly showing progress in the most recent quarter. But I tell you what, it was when I read this third quarter guidance, I had to bust out the old Robinhood account and get a couple of shares of AMD, because here's the deal. Revenue expected in the upcoming quarter, because I tell you what, the reason why I didn't jump in before we saw results is in the most recent quarter, we were expected about 7% growth. AMD delivering 9% growth. But we see a big bump up in expectations for the Q3, the upcoming quarter, expecting 14% growth, over $6.6 billion worth of revenue. Some analysts saying maybe close to $7 billion. Also, when we get into Q4, Q1 of next year, we're going to accelerate to 20 to 30% growth rate. Tell you what, that's a high hurdle to cross. And at least for the third quarter, AMD saying that they're going to do that. $6.7 billion is the guidance. Like I told you, 6.61 was the estimate. Now, when this company gives you their guidance, they say plus or minus 300 million, but they want to be towards that plus side. So you'd expect potentially, as the company beat by about $120 million over the midpoint, it is possible that AMD crosses that $7 billion mark in the Q3, which would take them well above the high-end estimate and way above the low-end estimate. All of these estimates are going to get bumped up over the next couple of weeks by all of these analysts. Also, they're going to start analyzing Q4. Is 7.6 a little light? Moving to Q1 of next year, is 7.27 billion. Is this a light? Could we get into $8 billion sooner than Q3 of 2025? Some analysts are probably going to say yes. And when we dive into these numbers over at AMD, not only are we seeing increases in this revenue, but we're seeing increases in our profit margins. That $5.8 billion, we talked about how that represented about 9% growth year over year. Last year, you did about $5.4 billion worth of revenue. It was about the same a quarter ago. The middle column is actually a quarter ago. Our far left-hand column is our most recent quarter. So notice the sequential quarter over quarter growth from 5.5 up to 5.8. That's absolutely fantastic. Look at your gross margins. Last year, they were at 46%. Then they went to 47%. And now look where they are. 49%. So that's why it's so important that when this company starts guiding to higher and higher revenue, you're probably going to pin them down for higher gross margins. That means higher profits. As you pay your research and development fees that basically stayed flat quarter over quarter despite higher revenue growth, both on the quarter over quarter and year over year, your marketing, general administrative flattening out as well. Amortization of some intangibles, which will add back in on those cash flows. Look at your operating operating income. Last year, you lost $20 million. Last quarter, you only made $36 million. And I say only, that's because we're talking about a $225 billion company. When you're only making $36 million in a quarter, that's simply not good enough. Well, look at this. Nearly $270 million of operating income that flows all the way down to net income of $265 million. That's basically double where we were a quarter ago, and it's basically 10 times more than you were a year ago. Things are looking really, really good, at least in the shorter term for AMD, if they can continue this momentum. And like we talked about, grow 20, 30% revenue side, keep those gross margins in those high 40s, maybe even low 50% range. Oh my goodness, you've got a lot of profits that are about to flow through to AMD, and some of that is being priced into the stock as we speak. Now, from a balance sheet perspective, it's absolutely fantastic. This is not Intel. They've got plenty of cash on the balance sheet, balanced off by a little bit of debt. We'll show you here when we get to cash flows. That's basically what they're doing with their operating cash flow. Now, pull down a net income number of $265 million. We talked about how that was basically 10 times higher than last year, where you made basically nothing, $27 million. You get to add back in depreciation, add back in stock-based compensation. Here's your net cash provided by your operating activities. Boom, up to $600 million. That looks like the pace that we're on, at least through the first 6 months of this year. About $1.1 billion worth of operating cash flow. Last year, it was just $865. Last quarter, it was just $380 million. Now, they aren't building fabs in Ohio, in Arizona, and doing any of this. So this company only spent, and I say only, $150 million on purchase of property, plant, and equipment. That's well under the $600 million that you made running your business. So you have some extra cash here. The company repaid some debt by about $750 million. When you come over here to the balance sheet, you do see a little bit of tick down in the long-term debt. Most of it came off the current side. So they had a portion of their debt that was due, and they paid it off, $750 million. Now you don't own any of that. They also bought back some shares at AMD, $350 million in the most recent quarter. Last year, they did none. Keep in mind that it's not really, it's not like a Google or an Apple buyback where you're retiring shares and really reducing the share count. Since you had $346 million of stock-based compensation in the quarter, this 352 basically cancels that out. And then when you look for the last 6 months, they had $717 million in stock-based compensation, buying back $356 million. So this isn't one of your big tech buybacks, but they are using some of the excess cash flow moving forward for that, and maybe potentially going forward, instead of servicing some of the short-term debt, maybe they use more of that for the buyback, other investments. AMD has been active in the acquisition space, particularly on the software side of things. This company is making a lot of waves. Now, probably the most important chart that the company gives you is their segment information. Here's your data center, folks. This is AI right here. Look, last year, $1.3 billion, $2.3 billion last quarter. Look at this, $2.8 billion. Oh my goodness. Look at the operating income from 147 to 541 last quarter, all the way up to $743 million. If this continues, this will be enough to send the stocks even higher. Now, your client computing, this is somewhat bullish, I think, for Intel. At least you're having a stabilization in terms of client PCs, under $1 billion in revenue there, as you saw kind of a trough in demand. Now you're seeing a refresh cycle on those laptops and those PCs, up to 1.4 last quarter, up just fractionally quarter over quarter, but we are seeing a stabilization there to 1.5, and it's not really even kind of refresh buying season from a back to school perspective, holiday shopping season. So you'd expect probably this number, this 1.5 billion, to continue. Operating income staying relatively stable quarter over quarter at about $90 million. You're gaming. Everybody's got a PS5 or an Xbox by now, so you're seeing dramatic drop-offs there in terms of revenue. 1.6 last year, down to 648, 922. Gaming probably includes some of those high-performance GPUs that are used in those gaming computers. Those typically see a refresh right before the holidays. So any gamer waiting for maybe a new GPU is probably waiting, more or less, most of them probably waiting for a new model. And then finally, you have embedded. This is your custom silicon. It was big last year, 1.5, slipped to about 861. But look at those gross margins, $345 million. Tell you what, if you can reaccelerate embedded and keep this data center humming along, well, you got a lot of profit. So things are looking really, really good for AMD, and so is the stock chart. Now, we've got, maybe if we want to put this maybe on kind of a weekly view, so you get kind of what I'm looking at technically. You made some bottoms in this stock right here at around, 2015. So clearly this area, and it's almost ridiculous to say this, at about $1.80 per share was the floor price. You bought Lisa Su in sometime, I think, in that 2014, 2015 timeframe, and it has been on a rocket ship. And more recently, you've kind of tested this area, and here we are basically today is we were testing this channel, and I thought, well, shoot, if AMD puts up a brick in terms of guidance, maybe in the most recent quarter, maybe their data center GPUs aren't really taking a foothold, well, you could legitimately drop and kind of dump out the bottom on this one. But no, in fact, it was just the opposite. They gave us enough to be confident in this one. We found some footing here. You'll have some overhead resistance on this one up here at 160. I don't think this one runs away, but you are confirming really since 2015, higher highs, more or less higher lows. I think at some point over the course of this year, if everything goes perfectly for AMD, and that's obviously, a big question mark, but if everything goes perfectly, you should be able to make another higher high on this one. That would be $100 higher. And that's why I stepped in the after hours on AMD. I tell you what, Q3 numbers look great. The different business segments look great. This data center looks great. They didn't really say anything that has us believing that's going to slow down. The gross margins, while they're not NVIDIA 70% like, we have grown them from 46 up to 49. And there really isn't a lot of doubt that this company is going to be able to put up maybe close to $7 billion in the Q3, and that brings confidence that the next 3 to 4 quarters should be mid-sevens, maybe even as high as $8 billion on that revenue side. And with those higher gross profits, this company is going to have excess cash to continue to grow the business, either through acquisition or buying back the shares. Folks, that was AMD's Q2. We'll be back later today, talk about Microsoft. We're waiting for the guidance on the conference call there. See you then.